Good evening, everyone. Giuseppe Basile here, also known as the Fib Stalker. Today is October the 18th, 2015. It's Sunday evening. It's actually almost 11 p.m. here time in Toronto, EST. And in this video, I'm going to offer you a review of the markets I follow. As you know, I follow 13 markets, and recently I've added the silver as well. So let's start and look at the euro dollar here, which is what you see on the screen. Um, and um, as you know, I've been looking at this market for a very long time frame here, and we know that this market has started to move lower into lower price at 140 price. First target at 108 on this very large time frame. Was it at the beginning of 2015 here, and then after that also the sequence of the next measure move in the in this market in the weekly short has failed, as we can see here. The 61.8% level, 113 35 year has been pierced on the upside, and there was an indication for us that the weeklies are not interested in pushing this price lower. So where this price can go, it can go all the way, believe it or not, to the next measure move here on the large weekly time frame, and that would be 120 122.27 here, and potentially higher. So that's where we are looking for this market to move to, and this market has recently traded longs here with participation on this 110.92, and that's what's pushing price high. As you can see, there's a target at 120 and even a second target at 124.84, but for now I'm looking at the 120 and 122.27 here, at least on the weekly time frame. When we move to the daily time frame, the picture changes, and we see more of a lateral move that is happening, however, on top of this 110.87. Why a lateral move? Because if we look at the daily here, recently what happened is that the market participated at this 110, so there was participation of longs, and then shorts came into play here. There was a clear rejection at 114. Price got hammered down 3 days here. Didn't get into that level, but just continued higher and then broke the back of the bear. So at the moment we have confirmed longs on the daily and weekly here, and the weekly and monthly it's not willing to push this price lower. So where this price can go, there are two levels I want you to watch in this market, and the first one is going to be the old halfway back here of the previous level, and that was broken, and we can also look at the old halfway back here. So if the market gets into 112.90, and using the Fib stalking proprietary timing technique, you see participation there, the next level of target is going to be 115.91. It's going to be 112.90, 115.91. We're talking about 300 pips here. With a risk of 20 pips, it can be a very, very good trade here, even if you, as you should do, use a free range trade. I spoke about the SP500 in this Saturday. I was invited to speak at the national annual Canadian Society conference, the Society of Tech Analysts, which is actually the local chapter in Canada of the International Federation of Tech Analysts. And I've been talking about the way in the past we identified last October 2015. We identified well before the fact, 3 weeks before the fact, we identified this participation of price. At the time was 1832. At the time when we had that contract, it was the third contract of 2014, and price went into the first target and then it retraced it again, and I showed the audience also how we were able to identify this level here, and that level has been retested recently. And we also know we have a lot of information about SP500. Until price gets below this 1807, there is no bear market, guys. A lot of people are looking at the bear market, but this market can go all the way to 25, 2600. And also the back of the bears were here, the sellers was actually broken here. So there's really no interest in this market in selling at the moment. Okay, so you have clear participation 1866, and this is pushing price higher, and we can look at where the price is being pushed here. It's being pushed into let me remove the previous measure move here. So this price is actually being pushed, and let me show here the first target. So I will need to change the scale here a little bit. So this price is being pushed into the first target, which is a 22.35, believe it or not. And the second target is much higher here, it's 24.26. So we start approaching that area where the larger time frame also has. No scare here. The market, although not healthy, the US market could continue higher thanks to the money being pushed by the Fed into the system, which eventually will cause a wider correction. Let's look at the dollar. The dollar has been moving around here in this area now for several months, and when we adjust the scale here, we can see that the highs to highs here has been participated mid of May 15 here, and again mid of June. And then there was this move lower in August that coincided with that scare in the markets as well. And then, as you can see, this level is being retested. So at the moment, there is no confirmation that the dollar will go lower. This level is still being tested successfully now for the 5th time last week, and there's a possibility for a continuation higher. Long term, the dollar, it's actually, it's a short long term. Okay, so even if you make it to 105.80, 105.90 here, if that's the case, I do not believe that this market can actually keep this strength here. So moving to gold, gold has responded, started responding to this area of participation here. And there were some interesting development recently, because if we look at the sequence of measure move, recent sequence of measure move, we have participation at this 12.30 here, pushing price lower into the first target. And now what happens is that we have to look at the next measure move here. And as you can see, the next measure move failed. So this could really be the start of a strong rally in the in gold. So it's important to have a position in gold, because gold could really surprise us, and actually gold could actually be the investment where money will eventually move into when things will start unraveling in US. We don't know when, but it's not a if, it's a when. Because of the US debt that cannot be repaid, and China was very clear about their intentions. They actually were on the other side of the trade when actually Americans twisted um, low low term, small term, low yield bonds with long term yields and bonds. So and that was Operation Twist. So as you can see here, 23.18, it's a potential target for gold, and believe it or not, this is the long-term target for gold, and gold, of course, could go much higher. When we look at the daily, where we are here in gold, is that gold is actually has moved laterally here and has moved laterally below resistance, but now that resistance is gone actually. So you can see here this resistance has worked one and twice, third time didn't make it, so still possible for this market to actually come now back all the way into this level here, and I anticipate this level, if he comes back to 1135 here, I anticipate this level to hold. If it does not make it to that level, this market can actually correct to the next measure move here as well, and that would be a buy as well. Okay, so you're actually bullish gold here. And the same cannot be said, at least at the moment, for silver here, because when we look at silver on the weekly time frame, we have a weekly 18.15, which still has the possibility to push 12 the price into 12.50, and that would be a good buy. However, if we consider what's going on the on gold as well, as soon as 1641 is pierced, when it will be pierced, this market could actually start moving higher in an interesting way. Now, if we consider what's going on in gold and price gets back to 1514, that'll be a buy as well. Again, and of course, we always have to study what happens there. All right, moving to US dollar versus Japanese yen. This market has been correcting since a few weeks here. The next measure move has held here, but this market now has confirmed shorts here, which can be seen also on the largest time frame. As you can see here, there was participation at that level, and we can represent this also with an all the way halfway back. So there is definitely a battle here between longs and shorts, and if price gets above 122.20, we might see the target of this measure move here being hit. If price gets below 116, this level here, 116.10, we actually might see a much larger retrace here. And in the past, I mentioned lows in 2012, 11, sorry, to high. So especially if the US dollar breaks that extension long, that's where we're going to see the US dollar versus Japanese yen, 175. That's not confirmed. That would only happen with a high probability if price gets below this 116.08. Euro Japanese yen, we know, and we have been watching on the weekly time frame this 122.11 now for since end of 2014. So it's almost 1 year there, and we have a basket setup with a target of 120.47, and we also have a potential participation of 122. So these targets actually lined up at the moment. So far we had shorts starting their participation at 138 here, and long still defending the area 133.62. If I look at the larger time frame here, I have to anticipate a failure of the euro, which would mean that the Japanese yen would actually reinforce on the US dollar and all the others. And pound versus Japanese yen, here we had, after the fact, the identification of measure move here from highs to highs. They came into play in April here, bit of April, and price never got into the first target. So this level is still there, and apparently the market is actually ready to retest that level. So this is on the long time frame. Here is a short. If you're in a short, you should stay in a short, because this market has the potential to keep trading on the downside into 176, 177 and 174.90 there. And the on the smaller time frame, as you can see here, shorts have traded and even confirmed here the target. So this can be seen on the daily time frame in a much more in a clearer way. Here we have the larger measure move pushing price into 177.83, and then we also have on the daily here a measure move that has been identified in the last 2 weeks, well before the fact, and 1, 2, 3, 4, 5, 1 week in advance here. And as you can see, the bears also have actually gave way here, because when we trace from lows to highs, we can see that the 182.25 did not hold. So if this market continues higher, I anticipate a reversal around 185.82. Otherwise, next week, if you see a break at 184.47, this market is going to continue lower. Okay, and that's what I'm looking for. First target would be 178, 179 here, and second target is going to be 176. Pound versus US dollar here. This market has traded the old halfway back short, and since then has been pushed lower. Now the opposing long here, 152.52, has held once, twice. The 61% at 150.91 was never placed on the downside. Now we are seeing, we have seen in the last 2 weeks participation on the upside, and this that move higher was stopped by the 50% level, 155.20. Now, the level has not been retested. If the level is retested successfully, there will be a short pushing this price lower. Of course, the pound US dollar will do will move most likely like the euro dollar. So still want to remind you once again, we don't know yet the destiny of the dollar index, if it's going to start moving lower here or later on in the future. We don't know until 92.58.6 is pierced on the downside. Okay, so this is going to impact the pound versus US dollar, as well as the other major that have that trade against the US dollar. An interesting development 2 weeks ago here also, this was 2 weeks ago, and we had the extension short here was actually filled. Now, what can happen is that this market comes to comes again to trade the old halfway back before a continuation higher. So that'll be from this level to high, and it's possible for the market to come, if it tests this week 071.46 and moves very quickly. You should not be scared, because that's the way the market behave, and algorithms might be interested in pushing price into this 071.46. Okay, and next is the New Zealand dollar versus US dollar, and same story here. We had an extension that was violated, and this extension was violated within an area of participation long here. So when that happens, we have to believe that the move lower of the New Zealand dollar versus US dollar is actually completed, and although this 64 could be retested here, this market is moving in extensions, and that might mean that this market could just retrace very little here into 066.50 and then continue higher. So that's one of the levels that we definitely will need to watch, and there is this level as well, which is the 66, 70, 80 that you want to watch as well, because this market is very extended. So it's unlikely that it's going to retrace all the way back. Anyway, if price gets below 66.24, that's the level that we're going to look at. US dollar versus Canadian dollar here. Very, very interesting move. And we might be for a full retrace of the old the last extension here. You might see a retrace of 90% of the move that I'm going to show you now, which was the last move from highs to highs, which is this well before the fact. There were more than 2 months here, sorry, almost 2 months before price got into 120.50, and then was pushed higher into 132 here, and after that is now coming back. Remember that this market is also within an area of course, likewise the dollar index. I mean, it has this, all these pairs that trade against of currencies that trade against the US dollar have the same shape here. So now what can happen in this market is very, very likely, having seen the movement here. So if you're short this market, you should be stay short. You should stay short into what? Into the next level of participation, 123.65. That corresponds probably to an 80%, 70-80% retrace of this previous measured move. Only when market gets into this 123.65, 70, we will know what the market wants to do. If it bounces, we're going to see a continuation high. If it pierces to 121 08 here, you can kiss goodbye this whole trend from 2011 here, and again this market is going to very likely going to retest the old halfway back here, so 114.30, and which is good um, which is not very good for Canadian exports to US, but it's good for Canadian who fly abroad or pay prices in US dollars. So when we look at the daily, we can look and see what happens. There is an extension here. The market is clearly extended, as you can see, and we will need to identify the extension that is driving this price lower, and a good level seems to be this second low here, and as you can see, there was participation here, and also price came 128.30 and 26. So the first target here was actually hit. So if the market retraces, there are two options for this market now. If it retraces to all the way halfway back, and this could happen actually on Monday here, this is a short 129.55 into the second target, and that second target will be the second target of the previous extension here. 126, 127 would be the target. Otherwise, if this market actually retraces more consistently, we're gonna see a 130 26. But this is a bear. This is a bear on the daily. So there are sellers that will come out, and so it's a good opportunity here to take a short in this market. And the second last market here, the euro versus the Canadian dollar. This market has been very, very strong and actually has retraced all the loss from the beginning of 2014 to April 2015 here, and then it went high again into 155. 155 seems to be a very strong level for this market, very strong and important level for this market, and as we can see, this market actually, it's has again failed the old welfare back. So higher level are not to be excluded. 174.75. So it appears that the euro long term, according to this view, would be strong. However, these moves here that have developed in very, very only for one day here, whereas price was not possible to keep the price in, are not very meaningful. So here what is meaningful is this participation on the short side at 150.77. So this is going to push price lower back again into 143.67 in the coming week. So if you are short, or if you shorted last week as well, should keep the short at least 144.14, 143.70 here, and should actually, and there is a possibility for this market to continue lower. Okay, so the continuation lower can be potentially to the next 142.90. And finally, US dollar versus the Swiss franc. This market has been moving in laterally now for since the beginning of the year. We had violation after violation, and we know that on a very long time frame, this market is in a lateral move. Now we have seen it coming back here. The bulls have not held, or not. They are okay. So they're still holding this price here, as you can see. If we break the 94.70, there is no reason to believe that this market cannot go back to 92.30. So that's what we see in this market, and I hope this review was useful, and I wish you a great week. If you want to get more information, come to fibstalkertrading.com or drop me a message on Twitter at fibstalker, or gmail.com, fibstalker@gmail.com. Thank you very much, and have a great trading and non-trading week. Bye bye now.